I'm gonna go ahead and get started here. My name is Adam Blumberg with a company called Interaxis, and we're gonna talk about how DeFi looks in an investment portfolio. So let me know if everyone can kind of see my screen. I really, two things I really dislike. I really dislike PowerPoint type presentations, and I really dislike over preparing. So with that in mind, I just kind of jotted some things down that I wanted to remember to talk about. And quite a bit of this will be kind of riffing and going off questions that you're going to ask. So a little bit about my background real quickly, our background. I have a business partner named Ron, and Ron and I are financial advisors here in Texas. We have a registered investment advisory service that we've had for quite a while. I've been in the business over 10 years. And we're financial advisors, so and we have a fiduciary responsibility, which means we have the responsibility to do what's best for our clients. So when we look at things like investing in cryptocurrency and taking that a step further, investing that in DeFi, we have to look at how this impacts clients. Now, that all being said, we don't actually have any clients that are doing this right now. But as we go through the space and learn more about the DeFi apps and the protocols, we start thinking about it that way, because we know eventually, not only here in the States, but everywhere in the world, people will be using some of these tools and some of these protocols and applications as their investment, because it's better in a lot of terms. A lot of places, it's better than what they have available. And so we want to make sure that they're doing it in a way that it's not just, we want, token go up, moon, all those things. It is being somewhat responsible, thinking about it as a portfolio, as part of your overall investment, part of your financial life, and not just something that you want to throw $5 in and hope it goes to $1 million. So with that being said, I've kind of laid out some things that I want to talk about and how we would look at a DeFi portfolio or DeFi investments or DeFi protocols or whatever you might be doing from the perspective of a financial advisor. And when you hear this, you're going to say, that's not quite as much fun as I wanted to have in DeFi. I want to turn my 20 bucks into $1 million, but in reality, that's the quickest way to lose $20. So some of the things that I'll talk about are the fact that we look at investments a little bit differently than most people, than most of those that are the DeFi enthusiasts, right? So we look at things like, what are your goals? So you start to look at your portfolio, right? And you go, what are my goals? And my goal might be to buy a house. It might be retirement. It might be college. Although we're seeing that college is changing quite a bit in the light of COVID. So these are some of the goals that you might be thinking about. And you look at, okay, here I have my money, this is my time here, and I need to get to this point, which might be retirement, home, college. How am I going to get there? And because of that, I need to figure out how I'm going to balance my portfolio and balance my risk to get from this point to this point in a way that's relatively safe. And it might be the fact that to get here with some of my investments, I don't need my portfolio to go up 500x. I might only need to make, I might only need to make 15% annually to get to here. So why do I need to take more risk? These are some of the things that we look at as a financial advisor. And quite honestly, some of the DeFi protocols and applications are actually, they're actually very well suited to something like this. What else do we look at from the perspective of a financial advisor? I'm going to keep bringing up the word risk. I should just write it here on my board quite a bit. Risk is going to be a big one. I'm just going to write it up above here. What is your risk? And this goes to a lot of different things. What is your risk profile? And your risk profile is how much risk are you willing to take in your portfolio? And I always tell people, in the traditional world, a risk is a measure of your stomach and not your head. Okay, and what that means is If you opened up your portfolio one day and it was down 50%, how would you feel? Would you not be able to sleep? Would you call me yelling? Would you fire me as your advisor? Would you have to get divorced? What would happen if you looked at your portfolio one day and all of a sudden it's down 50%? That is a measure of your risk. What are you willing to accept? And in your head, you might go, well, I'm young. I have some money. I'm willing to accept a whole lot of risk with this. I understand that between my age here and my age here, there are going to be all these wild fluctuations. But in reality, if you open up your portfolio one day and you're down here, how are you going to feel? If you're not going to be able to sleep at night, then you're not willing to accept this risk. You need to take on a little bit less and be in this range. That's kind of how we look at risk. And I know I'm not talking DeFi just yet, but I'm talking about how we as financial advisors look at any sort of investment, anytime you're putting your money, essentially giving your money, using your money for some sort of growth or something that is not just sticking it in your pocket. Although it can be argued that sticking it in your pocket at this point is taking on quite a bit of risk because you're losing a lot of value. Okay. So I hope that makes sense. So we have to look at what is your personal risk profile, and everyone's is going to be a little different. And as an example, when Nodar and his team came out with DeFi Zap, one of the most important things that I thought they did early on was they actually had a little questionnaire that had you go through and identify what your risk profile is, what you're looking for, and then they can recommend some of their Zaps that match your risk profile. That is extremely important because as some of these get more complex and as you start to get more users that are not the super DeFi enthusiasts, not the people that are going to understand liquidity pools and understand all the lending and everything that's going on, all they want is, look, I want to be a moderate investor. I'm okay in the DeFi world making 10%. That's all I want to do. DeFi Zap team, tell me what I need to do, and they'll do it. That was really important. And that, I think, is where more DeFi type apps are going to go. It's not all about it anymore. Buy Bitcoin and hope it goes up to 100,000, or buy ETH and hope it goes, back to 1,500 or something. It is now, okay, I'm in this decentralized finance world. I'm in this ecosystem. What can I do to grow my wealth within that ecosystem? I like the fact that I get to custody my own funds. I like the fact that I get to take control. However, not everyone has the ability to be looking at this all the time and writing down all the math and understanding how it all works. You say, look, I want to go to a set protocol or a DeFi app or something like that, and I need to know really what my risk profile is. The other thing we're going to talk about a little bit, is balance. Again, what we've seen from DeFi protocols in the DeFi ecosystem is this ability to balance. And when I say balance, I apologize, of course, the least technical difficulty I can have right now, and that's the fact that my marker doesn't work anymore. Okay, the balance can be between growth and income. Okay, it used to be that if you're investing in cryptocurrency, right? And I say used to be like 2 years ago, like that was decades ago. But it used to be you bought Bitcoin, you bought ETH, and you just hope it goes up. And then it was you buy Bitcoin, you buy ETH, you get into Binance or Bittrex. Yes.
Oh, sorry to interrupt. I'm not sure if you meant to start sharing your screen or go back to the whiteboard, but just so you know, your computer's showing at the moment versus your.
Oh no, okay.
There we go. All right, there we go. Yep,
okay,
all
better.
back to normal. Thanks.
Okay, so now we're on. Okay, so we talked about. I apologize. We talked about risk profile. We're on the. We talked about balancing, and right now I'm like balancing is between growth and income. And again, we've done a good job in the DeFi world now of being able to show that it doesn't need to be growth all the time. Okay, it doesn't need to be you know, that your coins or your tokens going up in value doesn't always need to be trading and hope that they moon and all those other things, because that actually caused a lot of problems. The issue of all we want to do is our token to go up. What we have now in the DeFi world that people have built, which is amazing, is this ability to say, I want to be within this ecosystem and I can have growth and I can have income generating within there. And what do I mean by income? Income is I can have ETH and DAI, for instance, and participate in a liquidity pool on Uniswap and actually be earning income. I'm holding ETH and DAI and I'm just earning this fee for being a liquidity provider. So how can I balance now within my portfolio some growth and some income, right? Where I don't need ETH to go from 208, whatever it is right now, to 1500 in order to hit all my goals, right? I can hold ETH here potentially, and I can be a liquidity provider in Uniswap, and I can just be earning regular income. And that way, look, if ETH just hangs around this $200 to $250 range, I'm just generating money here. The other ways I can get income is I can lend, right? And this can be Compound or, you know, Aave or BZX, something like that. It can be any of those things where I can be lending money and earning income. Now, this interest rate is going to go up quite a bit. This liquidity provider fee, I mean, that's obviously going to fluctuate, but it's a little more solid. And then you can combine some of these things, again, like with SET and Zaps and everything, where you don't always have to be managing it all the time. You can feel somewhat comfortable that your portfolio is getting you some income and getting you some growth. So we want to look at balance. We want to look at growth. We want to look at how your portfolio looks and maybe try to make it less of the crypto trader and more of, I'm just an investor and I choose to not have all of my money invested in the equities markets or you know, with financial advisor or with E-Trade or something. I choose to have some of my money in here, but now I need to make it safe and I need to make it match some of my goals. And again, that's some of what we look at as a financial advisor is, can we do that? And the answer is yes. Now we can. Part of the problem now from a DeFi perspective is we don't necessarily have all of the reporting and analytical tools that we would ideally want. And they might be being developed right now. We try to look at all of them that come out and identify which ones are good. Like Ethereum is really good. Instadap is good. DeFi Snap, that's now, they merge with DeFi Zap. That's a really good tool, but it's still difficult right now. Like I have gone to I have things on a spreadsheet, and I have things on a spreadsheet because I need to understand, I need visibility into basically everything I have. So let's see, we're gonna erase it. So now, again, looking at this as a financial advisor, you want to look at your overall portfolio, right? So you might have X amount in traditional finance. Now, keep in mind, of course, this is a DeFi and Ethereum-based summit. So everyone's going to be, you know, we don't like traditional finance, but it's there for a reason. Traditional finance has certain safeguards to it. It has certain regulations and legalities and everything that says that the good part, I guess, about having a centralized system is if something goes wrong, if someone hacks your account or something, there's some recourse there. There's some ability to get some of your money back. There's throats to choke, whatever analogy you want to use. And you probably should have some of your money in some sort of traditional finance. And this can be equities, it can be funds, it can be the bank, right? Where you might be earning money in interest. You're probably not earning very much in the bank, but there's some liquidity there. Then you go to your DeFi, which is probably part of your crypto, right? DeFi, because in this crypto, you might go, look, I'm going to have some Bitcoin, and then I'm going to have my DeFi stuff, right? And the point of the Bitcoin, I'm not saying to do this, please, this is not investment advice. I'm just telling you how I look at it. The Bitcoin is just, I just want Bitcoin to go up in value, right? The DeFi is, yeah, I want Ethereum to go up in value. And if that's all I want is Ethereum to go up in value, I can just hold Ethereum. I can just have Bitcoin in one wallet, Ethereum in another wallet, and I'm done, right? I have a question. Let me, I'll get to that question in a moment. Good question. So DeFi, if I'm in DeFi, this is where I go, look, I can use this. I can be part of this decentralized finance system. There are all sorts of ways. So within DeFi, I can go, look, I'm going to break this up into growth and income. And the income, again, might be liquidity pools. It might be lending. Okay. And the great part about this, as we all know in DeFi, is a lot of these positions you can get out of like that if you want to move your money. If you're actually using this, if you're paying for things in DAI. We've actually, gotten to the point where a lot of people will pay for things in DAI, and you have to have that liquidity available. And then your growth can either be just holding some sort of tokens. It can be staking, right? It can be whatever, something like synthetics, right? Which, I've held synthetics, I've locked it up, I've, done very well on that because I've tried it. I've done the same thing with live peer, where you're finding different ways to have growth and income within the DeFi space. But again, we have to look at it as a portfolio and not just, I want it all to go up. We have to look at how we rebalance that. Okay. So let's say if I'll go back, I'll just do this. So let's say I'm holding my synthetics. I'll give you a good example. My SNX, the token went up. I got a lot as rewards for holding the synthetics and locking it up. And I have honestly since sold some of it and moved it over here. And the reason is because, look, this went up, 100 and something% in a year for me. And I thought, I'm going to take some off the table. Not that I've looked at any charts and think it's going to go down, but I'm not going to get greedy. I'm going to go, okay, I made, 100% in this. I'm going to take some off the table and move it over here. I'm rebalancing. Okay. And that to me is important because I need to take, I need to not be risking it all in one token. That is really important to me. It goes back to what my risk profile is. My risk profile is I want balance. I want to be diversified, even though my diversified is across different decentralized finance applications. I'm diversified across traditional finance. I have some Bitcoin. I have some DeFi stuff. I have some synthetics, but I don't want my entire DeFi protocol to be based on the value of SNX or the fees that I'm generating from it. I can still generate fees from what I've gained here, and then I can move some over here and participate in different liquidity pools. And I'm using different applications to find some of the different liquidity pools that'll give me a decent amount of income. Right now, again, this is really hard to track with a lot of the applications that are out there right now, partially because things like when I stake synthetics or I've staked live peer, the amount locked up doesn't always show up in the application because it's technically not in my wallet. It's locked up. So you're not always going to see the accurate representation of what you own, of how much income you've earned. I have to keep quite a bit of it on a spreadsheet. So now we're to the point where we have some money in traditional finance, crypto, DeFi, and now the key is to rebalance so that we don't have all of our risk in one place. It's the same as if I were in the equities world and I had this portfolio that that's like 60, called 60-40, right? Where 60% is equity, 40% is fixed income or bonds or something, and my equity portfolio goes way up to where this is out of whack to where it's 70-30. Well, I rebalance now. I take some of this off the table and I move it over here and I get it back in line at 60-40. That's the same kind of thing I want to do. Okay. Other than that, any questions? There was a question, as an advisor, how can you charge a fee in a DeFi environment? That's a really good question. We're working on how you charge a fee in a DeFi environment, other than to say, if you're a financial advisor, like if you're a registered financial advisor, like we are, if you're, SEC approved and all that, you can actually just charge an hourly fee if you want to. You can charge a subscription fee. So our clients pay us a subscription fee to work with us, not necessarily an AUM, not an assets under management fee. So those are kind of the two ways you can do it in a legal way to say, look, we'll help you with your DeFi portfolio, and you either pay us hourly or it's part of a subscription that you pay. We're looking at all of your assets. These are some of your assets, so we'll help you out with that. Did that answer your question? Whoever asked me that? Okay, I saw you nod your head. I'm guessing that's your question. We actually, I'm going to show myself for a little while. We're coming out with actually our website and our membership is going to be for financial advisors to come learn all about this. We're going to have all sorts of material lessons, me standing in front of the whiteboard like this. And that's coming out probably in a couple of weeks, because we really want financial advisors to understand this. That's really important because the next generation of investors are going to be native to this, right? This is just going to be nothing to them. And the advisor is going to have to understand how it fits the overall portfolio, right? I have not heard of the SEC coming out with any sort of crypto licensing. Now, I'm going down a rabbit hole on financial advisors and how they can get paid. And I've already said it can be a subscription fee and such, but financial advisors aren't going to learn about this until they figure out how they can get paid on it. So hopefully that is coming soon. Now there are funds that people can invest in right now that are, crypto funds where financial advisors can get paid just for giving people exposure. Some people I know are coming out with some separately managed accounts that are going to be able to pay an AUM fee to advisors for getting them into it. The advisors are just going to have to understand the risk that their clients are taking on, but those are not DeFi apps. That's not helping people get into Zaps and set protocol and liquidity pools and all that. That's going to be a whole different level of learning that hopefully we at Interaxis are helping out with. Hopefully Ethereal Summit and all that is helping to train people for that next level of advice, because this is going to be really important, because it's going to bring not only US investors that want to get involved in it, but investors from all over the world now that have that are possibly making some money. It's going to give them the ability to now invest like we've been able to invest in the developed world for so long. It's going to give them the ability to invest. It's going to give them the ability to earn income, to grow some of their wealth. Another thing that I wanted to point out is important as I look at how I look at anyone's portfolio, whether it's DeFi or not, is, and I hope you all got this because it's getting erased now, is liquidity. So obviously we talked about adding to the liquidity pools, right? So liquidity is a big deal. When we started talking earlier about goals, if one of my goals is I want to buy a car, and I know that car, I'm going to have to put down $1,000 down for the car. I'm going to have $1,000 cash. Well, one thing I have to look at is, if I know I'm going to have this in a month, I need this to be liquid and safe. So as I look at my goals, I have to understand at what point do I need to take some off the table and make it really, really safe. How safe can I make that in DeFi? Maybe I can keep it sitting in DAI or Chai or something like that. Maybe I feel safe enough with it in Compound. I don't know, but you have to evaluate, and any sort of advisor that's going to help you has to understand how you can maybe keep your goals on track with how much money you have in liquid, how much you have in safe money, because of what you might need in terms of your goals. If it's a car, a house, if it's paying your bills and you know, look, I need to keep 60, 90, 120 days of my bills liquid, because I know more and more people that are just using DeFi essentially as their bank, which is okay, except you need to understand what your risks are there and how to keep some of your money safe. You can't afford a Black Thursday on the day before you have rent due, or the day before you have this car payment due or something. The other reason you want liquidity, okay, is for opportunities. Okay, so let's say you have this opportunity come up and you go, look, if I just had 1,000 DAI or 500 DAI, I'd be able to take advantage of this opportunity. So if I need to have, you know, say 500 DAI in my wallet, plus I need to have some ETH, right? Because I need gas for the transaction. If I have that sitting there all the time, bam, I can take advantage of that opportunity. And you know, right away if it comes up. If I don't ever have any sort of quote cash, something sitting there that yeah, isn't earning anything at the moment, but if I have it sitting there, then I can take advantage of those opportunities. Of course, I always have to make sure I have ETH in my wallet and then have a little bit of cash lying around. So I hope that makes sense so far. And I apologize, I'm running all over the place and trying to get a whole bunch of things in because you're merging the two things I know, which is kind of DeFi and traditional finance. But what we always have to talk about our clients is the risk. So some other risks that we have to bring up in the DeFi world that are even beyond the traditional finance world is, right? One, you have your risks of value, right? Valuations goes down. We have the same thing in traditional finance and decentralized finance. The risk is my Amazon stock can go down in price or in value. The risk is ETH can go down in value. Okay, we have those same risks on both sides. But here now you have the technology risks, right? And this is, you have smart contract risk, which we've seen issues before. So you can look at something like DeFi score and see how safe the smart contracts are that you're using. Because if you're using something like Compound, you can look at DeFi score and go, okay, I feel pretty comfortable using that because they've been audited and all these other things. Look at some of the work that Chris Bleck is doing and who has the admin keys and everything. And you can look at how safe you feel from a technology perspective, because we all know in the DeFi world, if someone hacks the smart contract, takes all the money out, you can't necessarily go get them. Everyone can talk on Twitter about where we think the money went, but that doesn't always get it back. Okay, so that's really important from a technology perspective, is how comfortable am I with some of these protocols and some of these smart contracts that I'm using? And even if you're making 100% return, it doesn't matter if you could lose your money like that. That is really risky, and it's more risk that we have to take on, and you have to understand, or you have to think about how much am I looking into that risk. Another tech risk is things like wallets, private keys. Okay, what am I doing to keep all this safe? Am I making sure that I write down my private keys and keep them somewhere safe? I'm married. Am I making sure that, God forbid something happens to me, my wife can get into this and get our money, right? Because it's, you know, what's mine is hers, right? I need to make sure that there's some way, whether it's a multi-sig approach or I write them down and hand them to her and I go, look, if I die, here's my private key, go talk to, you know, Travis, he knows how to help you get in or something. Don't give him the private key, but Travis can help you get in and get all of our money out. I need to think about those things. What if something happens to me? Hey, I just got a new iPhone the other day, and it didn't even occur to me until after I was going through it that I have to go through and reset all my two-factor authentication for everything, right? That's another risk that I have. If I lose all that two-factor authentication, how am I going to get back into my accounts? Because as we all know in DeFi, you know, not your keys, not your crypto, all these things, but having the ability to go in and actually manage my money is what makes it mine. So I need to identify some of those risks. We have the value risks, but in what we're doing in DeFi, we have so many technology risks that we have to accept and understand and just figure out ways around them. And there are really talented teams that are building ways around it, that they're building ways to help us, but it's not all wrapped up in one neat package yet, and there's no centralized figure to watch over it. In the traditional finance world, I use someone like TD Ameritrade as my custodian, and I know that they have so much of that built in that they can help me take care of it. And all I have to do is help manage the funds, and I have to focus on this for my clients and the risks in building the portfolio. Now, when you're custodying your own assets and maybe having an advisor help you, right, you need to start looking at all these aspects as well. And these are really important. Advisors don't really know about how to take care of these things. That's why we're trying to educate them, right? But you need to understand, how are you keeping your private keys safe? How are you making sure that, me personally, I think I have like 5 or 6 different wallets because I test a bunch of them out. I don't remember what I have, what protocols and everything I've done from different wallets. I have to keep a spreadsheet of all that. Having an application like a Xerion or something that links them all together, that would really help. Okay, so I need to look across all my wallets, my private keys. If I have some hard wallets that are sitting in a drawer somewhere, my wife or whomever has to know how to access those if something happens to me, right? You have some estate planning involved in there. I have to keep track of my 2-factor authentication. As I said, I got a new phone and totally forgot about that. And I'm home on the weekend and I'm trying to figure out how to get into my account, and I couldn't do it because I had to reset my 2-factor authentication. That's a big deal. Those are things that in the traditional world, you don't have to think about as much. You have a username and password. If you forget your password, you re-enter your username, you get an email, and bam, you got a new password, right? In this world, as much as we want it to be decentralized and I want to take care of everything myself, it causes some problems. Another risk that we have to, that from a value perspective, that we have to take into account is something that people don't always think of, is, let's say that I have ETH, okay, and then I go into some, and I keep bringing up DeFi Zap because I love that team and I love what they do, but I go into some Zap that is like a 2x ETH plus some sort of liquidity pool thing, and then over here I have some sort of SNX, and within SNX I'm trading synthetic ETH, something like that. Well, what I have to look at is I have all these different investments, and I might see them as all separate investments, but this is not diversified. And the reason is, and something I have to look at from a risk perspective is, let's say the value of ETH goes down from 200 to 150. What happens to all this? And that's something that I would like to know, right? I am heavily invested in ETH. Of course, in the DeFi world, everyone's heavily invested in ETH, right? But what happens to all these different investments if the value of ETH goes from 200 to 150? I want to know that. What in here, what gets liquidated? This obviously goes down in value, but what happens to the value of my portfolio? If this going down, 25% drops me 40%, well, that's not a very good investment, right? If going down 25% only drops me down 10, that's not such a bad investment. And I hope that makes sense for everyone. Because of that, we can figure out different hedges and different tools I can take advantage of, eventually within the ecosystem. There are things like Open and Oh My DeFi that have come out. There's Nexus Mutual, which kind of takes care of some of that smart contract risk if you want. But we're going to have to start doing and allocating some money to some of those hedges and some of those kind of insurance products to help with the to help with hedging some of the value that I can lose really quickly. So I think that was just about everything that I wanted to make sure I get to. This situation is very much like in the traditional world. We see advisors we see investors that might invest some money with some advisor and some money on their own and some in a fund, and they think they're diversified. But if we look across their entire portfolio, we go, hey, you're not as diversified as you think, because this advisor and this fund you have and you personally all have invested in Google. If the value of Google goes way down, every single one of your portfolios is going to get hit. Did you know that? And they go, no, I didn't even think about that. Well, that's something that is really rampant across DeFi because everything is so ETH-based. You want to see what happens when you've provided ETH as collateral, and you might have a vault, and you might have, again, a ZAP and synthetics and stuff, and the value of ETH goes down. What happens? Then you really want to know that. So you can look at, again, things like options with Open. You can look at smart contract smart contract cover with Nexus Mutual, and help hedge some of your risk. So with that, I'm going to look at some of my questions real quick. Would you consider USDC as liquidity? Sure, USDC is liquidity because if you can quickly go from, because you can pretty quickly get from USDC to DAI or USDC and pay something. To me, if I can quickly get out of something and not have, and for several days not worry about the value dropping significantly, then to me, yeah, that's liquidity. To something that is illiquid, there's not a whole lot of illiquid in the DeFi world, right? Illiquid is something I can't get out of in like 30 or 60 days. Okay, so illiquid in the traditional finance world is I can be in some sort of real estate investment that my money is locked up for years, and I might get a better return, but I can't get to my money that quickly. That is illiquid. Illiquid might even be money I have invested in the stock market because it might be a week before I can get that money. If I really needed it, if I need to pay bills or something like that, I need to get to that money today, that's not really liquid. So that is illiquidity. Liquid can be USDC, it can be DAI, it can be whatever you want it to be, to where you can get to it quickly and pay whatever you have to pay or take advantage of an opportunity if it's there. That is liquid money. Now, most of DeFi is actually pretty liquid because I can throw money in the compound and take it out right away if I need to use it. That's pretty nice. As long as I can do it, as long as it's not one of those days where, you know, the Ethereum transactions are taking like an hour and a half, but look, an hour and a half isn't really that bad. So let's see, have you heard of using trusts to own crypto? I have kind of heard of it to the point that, for instance, you can actually set up a self-funded IRA, a self-directed IRA, which is essentially a trust, an individual retirement account, which is a trust. You can actually set those up, and then within the IRA, you can do whatever you can have a coin-based account and move that to ETH and whatever else you want to do. It's not very widely used because then attorneys would have to understand how DeFi, and like we're just getting financial advisors to do it. So now you need like a trust attorney and that kind of attorney to be able to understand crypto. But I think it will be, I think that will happen in the future. I think trust will own it. We have to think about what the value is in that. What's the value of a trust owning DeFi? There could be tax, there could be tax benefits to it potentially. There could be estate planning benefits to it potentially. That's what we have to think about in terms of trust. What's the benefit of it? And is there the same benefit as in traditional finance? And then we have to look at, okay, then does the trust hold the keys? Is the trust the one? And who has control over the trust? So there's so many issues that go way beyond taxes, because trusts are more about control than they are about taxes. So good questions. I have kind of heard talk about it, but I haven't really seen anyone do it. Well, I've seen trusts that own crypto, like if it's a big Bitcoin wallet, right? So there are trusts that own just a ton of Bitcoin. In terms of DeFi, I haven't seen it as much, but there are some trusts that do own Bitcoin and have large investments. How about use your puts on Open? Okay, I think we talked about that. So yeah, if you understand how to use Open and those sort of options, then you can use that to hedge. Ideally, you could either have advisors or you can have apps that help you and look across your portfolio and go, hey, hint for all of you that are developers, here's an idea. If you could look across my portfolio and go, hey, you're really, if ETH goes down, you're really kind of screwed. If you bought this one, Open put contract or something, it would hedge your entire thing, and through our application, you can buy that Open contract and it costs you 0.01%. That would be an awesome application to have. If someone built it, that'd be fantastic. If you want to build it and you're not sure, call me and we'll figure out how to build it together. Unrelated but curious, any suggestions for how to communicate the value of digital assets to the traditional finance world when substantiating creditworthiness? wow, that's a long question. Is there a way you can email me directly and we can talk about that at a different time, because that's a long question to deal with. Cool. Adam@interaxis.io is my email address. Any other questions? Anyone want to turn their mic on and ask me? I can hear you. Anyone have any stock picks? No?
Hey, Adam, just making sure, did you get to Rick here? He was asking, are you taking any questions? Rick, if you can chat them to us. So basically anyone can send in questions still. It's just they come to me and Adam.
Right. Yeah, I saw Rick's question, and he's the one I said if you could email me, if that's okay with you, Travis, because that's
no, of course.
Not totally off the subject, but that's a long answer that I probably have to think about a little bit more.
No problem. Are there any?
I've only had one cup of coffee.
Oh man, I'm going on 2 or 3 here pretty soon. Any other questions, folks? Otherwise, you can.
What do you think is the best way to get into this new space? Oh my goodness. I don't know if this is from David. What do you think is the best way to get into? I don't know if you mean into, David, like into investing in it, or into building for it, or into advising on it. From an advising perspective, again, talk to me. We'll talk about how you get into it from an advising perspective. If you're in the U.S., there are probably some regulations that go into it in terms of advising on how to manage money, on how to invest people's money. The SEC seems to, follow me on Twitter. Awesome. And you can DM me there. My DMs are open, but Adam@interaxis.io is the email. But getting into advising on it, I mean, there's unfortunately the SEC here in the U.S. has funny regulations about if you're helping people with their money, you kind of have to be licensed and registered and all that. As far as any place else in the world, you have your own regulations to that. As far as advising on DeFi, maybe there are ways you could build applications to do it and you just charge a service fee. It's kind of a gray area. It's odd. I think you're kind of like where I'm going to advise on it until people tell me not to, until the government tells me not to. You can try that and see where that gets you. I don't advise that by any means. So getting into advising on it, if you're already a financial advisor, check out our website, come to our workshops when our courses when we have them. If you're not already a financial advisor, talk to me anyway, and maybe we'll figure out how to get you into the system. John asked you a suggestion for fans of DeFi and crypto, but have no prior financial knowledge as far as traditional finance, aside from contributing to the no prior financial knowledge. There is, look, like you can go to Udemy and Coursera and such and take courses on understanding traditional finance. There are some really good courses. I've looked at some of them. I actually paid for some of them just to see how they are. There's some really good videos and stuff. We tried to do videos on traditional finance. They weren't all that well received. Be careful of what you watch on YouTube. It's funny for me to say that because we have a YouTube channel, but be careful because people are trying to, pitch different things or remember they all have different incentives. There's some good courses, or you can email me and I will, I'll explain it. Well, I'll do another workshop where I just explain traditional finance for people who want to get into DeFi. That might help. Okay, yeah, thanks. Yeah, start watching our videos. The Bankless newsletter is a really good one in podcasts. I listen to a lot of podcasts. This right now, by the way, between the coronavirus crisis, the economic crisis, everything going on is a tremendous time to start learning about economics and finances because they're all being turned upside down. And this is a great time to learn about monetary policy, what the Fed is doing, and all these things. NLW, Travis, you probably have his Twitter handle, his Twitter account. I forget exactly what it is. He has some amazing stuff. We can put together all the great people that have Twitter posts that involve different parts of economics and finance and understanding that. And when you do all that, you'll really, DeFi and crypto will make more sense. So that. Any other questions real quick? Because I'm past my time. No, we're good. We got it.
You're all good, Adam. I just did
Of course, follow Travis. Travis has some awesome stuff with different, using different applications. It's not shameless at all, man. You're the reason for all this. So watch, because Travis does really good how to do different protocols and applications, and how to move your money in and out of protocols, and the why you'd want to do it, how you're earning money, and the incentive structures that have been here. The incentive structures that have been created are fascinating in DeFi and crypto, to get people to kind of do what you want them to do in a good way and in a bad way. And we have a lot more videos coming up about the incentive structures in crypto.
Yeah, lots of great. Please make sure you follow. Adam, what is your guys' YouTube handle? Like,
it's youtube.com/c/Interaxis here.
That's it. If you look up Interaxis DeFi videos, it should come up. Oh, there we go.
Yeah, it's right. There's all of our stuff.
There we go.
Down there.
Awesome. Well, hey, thank you everyone for joining this session.
Awesome. Thanks, Travis.
Thanks, everyone. Bye.